Okay, I believe this is recording now. So let's go ahead and get this up and going. I still have this disgusting cold, so you'll have to forgive me. Okay, so this is our first chapter in fraud. Okay, so understand the seriousness of fraud and how it affects individuals, consumers, organizations, and society. Of course, we already know that. It really does hurt everybody. Define fraud, understand different types of fraud, understand the difference between fraud committed against an organization and fraud committed on behalf of an organization. We should be able to understand the difference between criminal and civil fraud laws, understand the types of fraud fighting careers available today. And now we got the hiccups. There's quite a few of those. Okay, so here we go. Fraud impact on an individual. Janie, a 68-year-old widow, fell in love with a man she met on some dating website. She's never met him in person. He's probably lives in another country, someplace far away, and he's probably going to beg her for a bunch of money. Over subsequent months, the man repeatedly appealed to Janie for monetary help while affirming his love for her. This happens quite a bit. Pay attention to this. She sent the man more than $282,000. She cashed out her retirement and mortgaged her home. She refused the warnings of her friends and family. She fell for a romance scam, and unfortunately, the person is probably in another country, and they're never going to get that money again. That's just really sad. So this is in 2008, so this is over 10 years ago, more like 15 years ago. Bernie Madoff, single biggest investment fraud in history. It was a big old Ponzi scheme. Ponzi was an actual person who was the first person to come up with this type of scheme to cheat people out of money. They provide quick returns to early investors using the money invested by later investors. So whenever you have a investment that promises a huge return, that seems really out of the ordinary. It's probably not true. Okay, so Bernie sentenced to 150 years in prison, required to make $17 billion in restitution. Okay, let me get my little face out of there. Okay, just there we go. No, let's get my face all the way out of there. Okay, government agencies publish only statistics directly related to their jurisdictions, which means the United States. Researchers conduct industry-specific fraud studies, but comprehensive research is rare and not always based on scientific approaches. Oftentimes you're going to see a lot of fraud coming in out, or a lot of research coming in out of Africa. Just FYI, it's just what happens, what I've seen. Insurance companies, not that it's bad, not that it's great, it's just what it is. Insurance companies provide fidelity bonding and coverage against employee and other fraud statistics relate only to specific cases. Victims of fraud is occasionally featured in the media, but many victims choose not to make their fraud losses public. Okay. The Association of Certified Fraud Examiners. So what I went ahead now, see, they've got, they're mentioning the 2022 report. So let's go ahead. See if I can get this out of here. There we go. And come back over here, because I went and I pulled up the 2024 report. And so all I did was I went into the ACFE.com and I went over to their media, and I said, okay, I want to find the report to the nations. And this is 2024. So they're 2 years behind. And it's really interesting. Now they just got some of the highlights here. Now, I've downloaded this report, I can't tell you how many times, but there's always some really interesting pieces in here, and you can come in here and just look at what's going on. Now, this report is to the nations, which means international. Okay, it's not just the United States, it's international. And let's come over here. So this is some really cool key points. Median loss per case is 145,000. Average loss per case is 1.7 million. Okay, I want you guys to realize that the median and an average are two different terms. They sound like they're going to mean the same, but they're actually not. Median means that one point in a group of data where it indicates the exact middle point between the upper set of data and the lower set of data, okay? Whereas the average means you take all of the data, and let's say there's 100 pieces of data, and you take the sum of that, and then you divide by 100, which makes the average. Two very different things, which is why we're getting two very different numbers here, okay? Basically, 5% of all revenue is lost to fraud. Here causing total losses, let's see, 138, 1,000, almost 2,000 cases, 138 countries. And they just have all these really cool figures here in reference to fraud. Asset misappropriation, 120,000. Financial statement frauds, look at that, it's almost $1 million, 750,000. Corruption, and they just really cool things. And anybody can come in here and you can get into this website and check this stuff out. And if you, and most of you are planning on going into accounting because you don't take this class unless you're an accounting major, I highly recommend becoming members of some of these organizations I point out because one, it's cheap. Two, there's networking, and three, there's scholarships. Okay. So it's really, these are a great way to look out into your future and prepare. So just some fun things for us to kind of look at. And I'm going to download this, and then there's another report, but I got to log in because I am a member. And I need to pull this report down and see if I can pull it down so I can share it with the classroom. So we'll see what happens there. Okay, so I'm going to come back and I'm going to go into the PowerPoint. And so you can see here is, and I'm going to tell you also, they have an annual conference, and we're talking, these conferences are spot on. I wish I could, I haven't been to one in 2 years, and I'm bummed about it. I love going to these conferences. They are the best conferences I've ever been to. You get to meet, it's not just a couple hundred people that go, we're talking thousands of people go. I've been to the one in Seattle, I've been to one in Nashville, I've been to one in Austin. There's just tons of these conferences are just amazing, and they bring in such really cool speakers. The one year that I was really bummed to miss, they brought in the lady, she was married to, I want to say Mendez. Okay, so basically, if you go watch, Ben Affleck was in this movie, and basically he was an FBI or CIA agent, and he had to go into Iran and rescue a bunch of hostages. Okay, it's a true story. Well, they brought in the woman that was married to that man, or woman who is married to that man, who is also an expert disguise, a master of disguises for the CIA. So they brought her in to talk. And then one year they brought in the kid, Bobby McFarland from the Fry Festival to talk about why he didn't do it. But oh, good Lord, after I read everything, he did it. The kid is just a bouncing fraudster. Anyhow, so fascinating stuff. And you can even apply and get scholarships to go to this fraud conference as well. Just FYI. Okay. So fraud has been a serious problem. So I did a study, and I got it actually on my payroll. I'm working on it. I'm writing a textbook. It's for payroll. And the fraud legislation really didn't begin until the late 1800s, early 1900s for the United States. Now, granted, there's always been fraud going on. Always, always, always. When I was doing my research, I found some of the first cases of fraud, BC, and one of them happened to be a man in the Middle East, and his name was like Hegolassas or something like that. And he owned a boat, and on his boat, he had a bunch of cargo, and he had purchased insurance on that cargo. Well, what he did was he took all the cargo off when he thought nobody was looking, and he set his boat on fire so he could get the money from the insurance company. Well, he was found out. And then there was another one where there was a couple of our founding fathers' children who committed fraud. So it's been around. It's been around forever and a day, and it will continue. The only thing we can do is keep our eyes open and always look for the future fraud. Okay, so here is one. A large US automobile manufacturer recently experienced $436 million in fraud losses. It doesn't tell us who it is. I'd like to see who it is. If the manufacturer's profit margin, net income as percentage of revenues is 10%, the company must generate 43.6 million additional revenue, restore net income. Fraud strain adversely impacts national economies. Yes, it does. It also makes us unwilling to do work or business with certain people because we think that they're going to commit fraud. Okay. So here we go. Check one. A country A has a gross domestic product of 100 billion and a profit margin of 10%. If country A loses 1 billion annually to fraud, how much additional revenue must country A generate to account for the fraud? B, what percentage of country A's gross domestic product must be used to offset the fraud? Country B has a GDP of 10 billion and a profit margin of 5%. If country B loses 1 million annually to fraud, how much additional revenue must country B generate to account for the fraud? What percentage of country B's GDP must be used to offset the fraud? Which country is more likely to attract international investment and why? Let's find out. Okay, so here we go. Country A has gross to 100 billion and a profit margin of 10%, but loses 1 billion annually. Country A must generate 10 billion of additional revenue to offset that loss. Okay, so 10 billion multiplied by 10% is the one. Okay, that's where they're getting it. Revenue needed to offset represents 10% of country A's gross domestic product. Country B has 10 billion, profit margin of 5%, but loses 1 million annually. Country B must generate 20 million of additional revenue to offset the country's loss. So here's 10 billion. They're gonna lose 5%, so 5% of 1 million. And then you're gonna multiply, but okay, that's fine. The revenue needed to offset represents 2% of country B's gross domestic product. Country B, its fraud losses are a smaller fraction of its gross domestic product. Okay. Okay. Fraud, generic term that includes all ways one individual can gain advantage over another by false. What is fraud? By false representation. There's no definite and invariable rules. Typically includes surprise, trickery, cunning, and unfair ways. Another is cheated. Differs from robbery in that no physical force is involved. Fraud is different from unintentional error. So sometimes we make mistakes. Okay, that does happen. But fraud is intentional. Elements of fraud: a representation about a material point that is false and intentionally or recklessly so, that is believed and acted upon by the victim to the victim's damage. Okay, so here we go. Charles Ponzi. So remember, I told you Ponzi. There was a student, he was the first one. Immigrated from Italy to the US in 1903, involved postal coupons and currency exchange with cited 400% profit, bragged about success, promised to investors double your money in 90 days, questions raised about the legitimacy, paid returns to original investors, unable to pay returns without new investments, and then, of course, legal action. People lost money. Um, Ponzi scam is extremely helpful in understanding fraud. Well, okay, I'm going to tell you it's greed. Not only is it by Ponzi, but everybody else who is entering in. If it sounds too good to be true, then it's too good to be true. And people, especially back in this time period, people were getting kind of crazy with trying to invest money. Now, the term schemes has been around for a long time, and oftentimes back in the 1900s, 1800s, 1700s, when you heard the term schemes, it meant into investments, some type of you're buying stocks or bonds, or you're buying some type of investment like that. That's the term schemes, okay? So when you hear this, just kind of think about that they called all of the speculating schemes. So back in this time period, there was a lot of people who were speculating or who were entering into the schemes because they were finding out that investing into the stock market or into bonds was providing a nice return on investment. And so everyone started doing that, including just not just the rich people, but the lay people as well. Well, they don't have as much cash flow as other people. So what they did, these lower income persons who were investing, they started borrowing money from the banks in order to invest into the stock market. Well, we know the stock market crashed shortly thereafter. And of course, all of this was lost. And so this was one of the contributing factors to the Great Depression. People were borrowing money in order to make money with, on speculation. Okay. Now, this one here, I'm going to tell you. So I mentioned I have seen um well, it was Billy McFarland. I've seen him speak, okay? And I'm going to tell you. So I'm sitting in this fraud conference and there's thousands of people sitting around me. And I'm listening to this kid, and okay, and he's a cutie patootie. Okay, I will tell you. He was young, he looked very personable, well dressed, well groomed, nice looking young man. And he's talking about what went wrong and this and this and that. And I'm just listening to him and I'm like, okay, I always give people the benefit of the doubt. And then I go research and then I change my judgment. But so I'm listening to him speaking and I'm like, oh, the poor sweetie just got in over his head. He didn't know what he was doing. Oh, if he had an accountant that knew what they were doing, he wouldn't have gotten into so much trouble. A better project manager. Okay, so anyhow, so I went back to the hotel and I'm thinking this in my head in reference to this kid and thinking, oh, he tried, he just made a mistake. So then I get back to the hotel and I decide I'm going to do a little research. Well, this wasn't the only time Billy McFarland tried to defraud people. He had all kinds of schemes going on. I believe this was either, I want to say there was one before the Fry Festival, then there was the Fry Festival, and then as he was being charged with all of it, he was cooking up and trying to do another scheme that he got in trouble for. Okay, so there was three when everybody knew he was a little fraudster. Now he's working on number four, but I don't think anybody's going to buy it. But I mean, he was just a little shyster, but he's so personable. And he just, he talked a good talk. Just, you got to be real careful with those people. Confidence. Well, this kid had confidence. The single most critical element for fraud to be successful. By paying early returns, Ponzi gained investors' confidence and convinced them that he had a legitimate business. The word con means to deceive, comes from the word confidence. It is difficult to con anyone out of anything unless the deceived has confidence in the deceiver. Suppose you wanted to con a bank teller. Which of the two outfits would you wear when entering the bank to perpetrate the con? And why? Okay, so you got outfit number one, which is a business suit similar to the ones worn by the bank's typical successful clients, or well-worn overalls and boots typically worn by manual laborers. So, when you're thinking this, I know most of you are thinking, well, outfit number one, and that's probably going to be your go-to outfit. Now, I know I haven't gotten into it when I was speaking about the different types of fraud theories out there, but one of the first fraud theories is white collar crime. So you got white collar and you got blue collar. Outfit number one is white collar. Outfit number two is blue collar. They have found that law enforcement judicial proceedings treat white collar workers different than blue collar workers. In fact, they let off the white collar workers more than they do the blue collar workers. And that has to do with the person in that white collar suit looks like they are respectable. They hold a position of authority. They're a member of the community, so on and so forth. And so they hold them in higher esteem than they would a blue collar worker. Is it right? No. Does it happen? Yes. Okay. So types of fraud, two main distinctions. Fraud committed against organizations, fraud committed on behalf of organizations. Another way to classify fraud is to use ACFE's, that's Association of Certified Fraud Examiners, definition of occupational fraud. The use of one's occupation for personal enrichment through the deliberate misuse or misapplication of the employing organization's resources or assets. Done in secret, benefits the perpetrator, costs the victim organization. Okay, so here's the three categories of occupational fraud. Asset misappropriations. You've heard me say it. If you have it, somebody's going to try to steal it. Right there. Corruption. Fraudsters wrongfully using influence to gain personal benefit contrary to their duty of their employee. Bribery comes underneath there. And then fraudulent financial statements. That's when they falsify your financial statements. And that can be by misclassifying your fixed assets. That could be from reporting revenue earned that you really didn't earn, or you're going to defer expenses incurred even though were incurred this period, and you're going to push them off until some future period, and that's, you're not allowed to do that. So those are different ways that you could commit financial statement fraud. Other financial statement frauds is just, misclassifying your revenues and expenses. Also your wages, that could be another one that you want to look at. Okay. Frauds where a company or organization is the victim, employee embezzlement, vendor fraud, customer fraud. Management fraud, victims are shareholders or debt holders of the organization. Investment scams and other consumer frauds, victims are unwary individuals. And then there's miscellaneous frauds. This is just classifying it according to the victims. No matter what, it's fraud. Right now I'm in the middle. I just got done doing a cybersecurity training, and the ways that people are trying to get a hold of my data, get a hold of your data to commit fraud is just overwhelming. I can't tell you how many times there's a investor in the AWC Foundation, and I'm not even sure if she's still alive. And I got an email from her saying that she's got a piano she wants to sell me. We have all received that email, but it just kind of blows me away. It's still going around. Okay, so here you have some different types of frauds, and you can read that on your own. and employee embezzlement. Now you've heard, now I'm sure most of you've had me in the classes, and I know I sound really rough right now, so you'll have to excuse me. But if you have it, they will steal it. You always have to be one step ahead of the employees to make sure that you're protecting the company against any type of fraud. Remember, when we look at the fraud triangle, the points are rationalization, pressure, and opportunity. Rationalization and pressure are internal to the fraudster. Opportunity is the only thing the company can control. You eliminate the opportunity, it doesn't matter how much pressure or rationalization exists if there's no opportunity to steal. So, got to focus in on that. So there's some people who, there's direct embezzlement they're mentioning. And then they have, and that just, they directly steal. And then here's indirect embezzlement, that's kickbacks from vendors or customers in return for lower sale prices, higher purchase prices, or the delivery of inferior goods. So something like that, it's going to look like this. Okay, so I'm going to pretend that I am the purchasing person. Okay, I'm the purchasing person for ABC Corporation. I go to my buddy who is, they're a salesperson for XYZ. And I say, look, I'll buy all of my copy paper from you. And let's say that a Rima copy paper typically costs $3. Okay. I tell them I will pay you $4 per ream of copy paper. Now I know your company only charges $3, but let's do this. I'm going to pay you $4. You keep 50 cents and you kick back 50 cents to me. So that's kind of what's going on with that. Okay, and I'm going to come over here and I'm going to come. I'm going to pause this for just a moment. Okay. So you can see here we have direct embezzlement, indirect embezzlement. I gave you an example of indirect embezzlement. Let's see if this, well, there we go. Discussion question number 2. So whether the embezzlement was direct or indirect, we got CVC construction, new home construction, and older home remodeling. They have a large market share. They struggle to make a profit. Investigations showed that CVC employees were using company supplies and equipment to do their own remodeling jobs. So they were stealing from the company in order to make money. I've seen this happen way too many times. Okay, so that one is direct. In his role as a purchase agent, Mark paid a contractor nearly $100,000 for work that should have cost about $50,000. The contractor then paid Mark a kickback of nearly $30,000. So that is going to be an indirect. Okay, vendor fraud, 2 common types of fraud. Perpetrated by vendors acting alone or perpetrated through collusion between buyers and vendors. I gave you an example of that earlier. Usually results in overcharge for purchased goods, shipment of inferior goods, non-shipment of goods even though payment is made. Example, Department of Defense case. Well, let's see if they give it to us. They did not give us the Department of Defense. I know there are cases with Department of Defense where they paid more than they should have. And there's been times when they've paid and they haven't received the goods. Okay, types of customer frauds. Customers do not pay for goods. Customers pay too little. Customers get something for nothing. Customers deceive organizations into giving them something they should not have. And here is a example is a fraud involving a bank in Chicago. Okay. Management fraud, also called financial statement fraud. And so these are not even close to the number. Fannie Mae, HealthSouth, Tyco. Do they have Tyco in here? Nope, they don't even have Tyco in here. Tyco, so they got, let's see. I mentioned HealthSouth, Fannie Mae, Tyco, Adelphia. I mean, I can keep going and going and going and going and going. There's been hundreds of cases of fraud from publicly traded corporations. And that has come from the late 1990s all the way up until now. Okay. So WorldCom, this is when what I believe they were doing there was they were giving the board loans and then forgiving the loans. Enron, they were not putting all of their liabilities on their balance sheets. And when everything came down to it, their stock took a big crash. Their executive management team dumped their stock in the market, hence insider trading. Waste management, that was misstating revenue. Theranos, I'm not sure what happened there. Or Wirecard, Tesco, FTX, Vatican. Well, I can just guess on that one. Okay. Now, investment and other consumer frauds, fraudulent and usually worthless investments are sold to unsuspecting investors. Customers are sold worthless assets. Money is taken from unsuspecting individuals using a fictitious pretense. Common internet scams in 2023, romance and payday loan scams, one-time password bot scams, student loan forgiveness scams, phishing attacks, ransomware, and free gift scams. Had a student show up. He wasn't in my office. It just so happened I walked into one of my coworkers' offices, and this student was mailed a check and was told to buy a bunch of stuff for himself and then send the difference back to the company of what he didn't use. Well, that's a big, huge scam right there. That's a big employment scam. They're not just, the check is void. It's worthless. And so by the time you go and let's say you buy a couple $100 worth of supplies, and then let's say they gave you $500 and you send back $300. Well, when everything hits, when everything settles, you're going to be out $500 plus the $300 that you sent to them. So, well, you're going to be out the $500 total. Okay. Common consumer fraud schemes. We have Ponzi's, pyramid, telemarketer, Nigerian letter or money scam. And so you guys can pretty much know what those ones are all about. I almost got hit by this one right here. And so somebody called me up and said they were with my bank, and they said there was this huge Walmart charge coming through. And so I'm like, what? And so I got up, ran over to my bank, and I'm like, okay, no, I'm not seeing anything. I'm not seeing anything. Well, it's coming through, ma'am. It's coming through. Do you want us to put a stop? And I'm like, yes. And she's like, well, I'm going to need the last 8 digits of your credit card. And I went, what? You need the, what do you mean? You have you know what my numbers are. Anyhow, it was a scam. I went over because it was through my bank. And so I live literally like a quarter of a mile from my bank. And so I told him, I said, look, I'm going to stop this right now. I'm going to go run to my bank because I'm just going to go see what they tell me. And she tried to get me to stop, but I did. And I found out it was a scam. So be very careful. Even I was getting lured into it. It's just, they started asking for pieces of information that they shouldn't have. Okay. Identity theft, advanced fee scams, redemption, strawman, bond fraud. They claim that the US government controls certain bank accounts and victims can gain access if they purchase these expensive training kits. Letter of credit fraud, perpetrators create bogus letters of credit and sell them to unsuspecting victims. Okay, here we go. Internet fraud. Oh my gosh, there's so much internet fraud going on. You've got to just pay attention. It's almost worth it now to buy one of those subscription services where they monitor your credit. Okay, knowledge check number 2. So for the following scenarios, determine if fraud is likely, and if so, what type. A friend tells you about a business opportunity with a startup company in a foreign country. A 200% annual rate of return is promised if you invest immediately. Okay. You read an advertisement in a local paper in which the seller is offering a piece of used furniture for 50% off the comparable new price. You receive an email regarding a business deal involving a money transfer of about 22 million from a dormant bank account. Okay, so we can go up here. We already know what this one is, one of the first ones. That's going to be like a Ponzi scheme right there. Okay, let's come back over here. Okay, you read an advertisement. Let's see. Delivered. Okay, I'm not sure which one that would be. This depends on if they give you the new furniture. More than likely, this is stolen furniture. But if they give you the furniture, it could, I don't know. This one is kind of iffy on me. And then this one, the 22,000 from a dormant bank account, that was one of those ones that they just mentioned. Redemption strawman bond. Okay. Okay, so let's see what they see. Okay. Oh. Or money scam, Nigeria, unlikely to, since the asking price is a reasonable fraction of comparable new item, likely a Ponzi scheme. Okay. Impact on national economies during 1920s caused the Great Depression. And remember, I just mentioned to you, so it wasn't really fraudulent speculation. What it was, okay, so you've always had the really rich, okay? And back in the early 1900s, it was, yeah, that's what happened. So you had these rich people and they were able to invest in the schemes, the bonds, the stock, the stocks as well. They were able to make investments in the stock market, okay? Well, they were getting such a great return on their investment because the stock market was doing so well that people in lower level wage brackets started wanting to invest as well so that they can get money. And so they started just taking their extra cash and investing, realizing how good it was. They started borrowing money and using that money to invest. Well, then the stock market crashed and now these people can't pay their loans back. So that's kind of what happened right there. Excessive and fraudulent speculation, 1980s and 1990s. That is true. I remember this. I was a kid during most of this, and I didn't realize how bad it was until my parents told me later on. This was kind of scary. Widespread industry fraud led to subprime mortgage crisis of 2008. Okay, so that one also happened. Some people blame it on the government, some people don't. Some people blame it on greed. I think it's a combination of everything. So what happened is the federal government decided that they were going to lift some of the restrictions and rules they had on these different types of organizations. And they even went as far as telling the states that they didn't have any jurisdiction over these different home loans that were going out. So basically the federal government lifted up the credit worthiness and made it really, really easy to be predatory lenders. And so a lot of banks went into that and did that. And so then what they did was they would go and they would lend money to a bunch of people and they were doing adjustable rate mortgages, not fixed. And then they would package all these loans up together and sell it in the secondary investment market, sell all these loans in the secondary investment market, and people would buy them. And now 5 years later, when our economy is tanking, people are losing their jobs, they can't go back and they cannot refinance these adjustable rate mortgages, which had a balloon payment due in 5 years. And people are losing their money back right and left. So that's part of it. Okay. Okay, criminal and civil prosecution. Yes, you can do both. Sarbanes-Oxley Act started the criminal prosecution of your CEOs, your CFOs, who make bogus claims about their internal controls and the correctness of their financial statements, they can go to jail now. Okay. So this is in reference to criminal law. Okay, so criminal law, beyond a reasonable doubt, civil law is the preponderance of evidence. So there's two different qualifications there in terms of when you find somebody responsible or guilty. Criminal, beyond a reasonable doubt. Civil, the preponderance of evidence. Okay, so here we go. Let's see who's been Rajaratnam insider trading. Oh gosh. You know, I mean, if we really want to get into this, we could, let me see if I can be sneaky. Because, you know, the SEC won't let me be. They like to regulate me. Okay, you can come in. Well, they got a section totally about whistleblowers. Newsroom. Okay, so we're just gonna go right here to the press releases, okay? This is where you're gonna find most of your information. Okay, founder charged in $275 million fraud scheme. Staff issues FAQs, securities communications, creates a task force on the road. Okay. Trade through prohibitions. Okay, here we go. First Liberty, $140 million Ponzi scheme. Keep going. You know, I mean, this is just through June. Oh, this has been a light couple of months. Okay, usually it's like jam-packed three or four press releases with different frauds. So I'm in May. Here we go. There's another Ponzi scheme. Here's something else, Unicoin. Okay. 3 Texans with defrauding investors of 91 million. PGI, global founder, crypto asset fraud. So you can see it's still going on, and you guys can check in here. Here's $6 million to a joint whistleblower. This is really important now, because if somebody whistleblows at the publicly traded corporation level, the whistleblower, if the corporation is found guilty, can be paid back or paid some of the fines that have been attributed to that company. Just FYI. Doesn't mean it's any nicer, but you know, hey. Okay, so in here they're talking about civil law. I've got a dog chewing on something right now. Okay. And so you can see the differences between these. Now, please note that the SEC right here can do both criminal and civil. Okay, which of the following statements is true? When fraud is committed, civil litigation proceeds first, followed by criminal prosecution. The purpose of a civil case is to right a wrong. The burden of proof in a criminal case must be beyond a reasonable doubt. Okay, in criminal cases, various claims may be joined in one action. Civil cases are initiated by a plaintiff filing a claim. Okay, let's see which one of these is true. I have a feeling that's going to be our true. It is our true. Okay, in here, I have seen plenty of civil litigation follow a criminal prosecution. I didn't want to say anything. Okay, its purpose is to gain compensation for harm done. This one is true. Whoops. No, you don't do this. You do it one at a time. If you're going to have a bunch of plaintiffs go, and that is No, I just had it in my head. Oh, gosh. Class action. That's a class action, but that's civil. Okay, civil cases are initiated by a plaintiff filing a claim. That is true. Okay. Okay, preparing to be a fraud fighting professional. You're going to need analytical skills, communication, and technology. You're going to need to be able to just look at stuff and see. You're going to be able, you need to read the evidence and read the numbers and determine the story. Okay. Some understanding of accounting, okay, human behavior, sociology, any of your criminal law enforcement type courses are perfect. Sociology, psychology are perfect, and your business courses are fine. Okay. So here we go. AC requirements to become an ACFE. You need 120 credit hours, basically a bachelor's degree. You're going to have to take a test. You have to remain in good standings with the ACFE. You're going to join a chapter in your area. You're going to have to sign the ethics. Okay. Academic requirements. Generally, a bachelor's degree. I haven't seen this happen, but bachelor's degree. When I went up and I went to the ACFE conference, I can't tell you how many of the people that were there were employed by the government, the FBI, the CIA, the Secret Service, all, all, all aspects of state government. There were so many people there that were government employees. Okay, here we go. Here's the professional requirements. Here's the examination. I'm not going to push you on an examination. You do have to complete all 4 levels. When you're going to be sitting for one of these at the bachelor's level, usually you're going to be paying a pretty penny for your examination. So take that into consideration. Okay. And here's some fraud related careers. Here's your self-assessment, and then I'm going to get a summary and I'm done. So I'm going to go ahead and stop this, and I'm going to save it and put it up into the modules.